everybody. This is webinar Trading Psychology and Discipline with Thomas. I'm Thomas. I'll be the one hosting the webinar today. I hope everyone will enjoy it. Feel free to ask any questions while the webinar is going, and I will be able also to answer them or save some of the questions and answer them in the next webinar. Thomas Megan, Senior Account Manager in AvaTrade. I've been working in AvaTrade for the last few years as an account manager, and I'm happy to answer any question that my clients are having. Also, for my clients, I'm having one-on-one sessions on how the platform works and better understanding different things. And I'll be happy to share with you today some of them main questions that I'm having and the main common mistakes that traders are doing, and I hope that everyone will participate. You can ask questions while going with the webinar, and also we will do things live on the WebTrader itself, so you will be able to see how things look like on the WebTrader itself. We'll start with the risk disclosure. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as investment advice, recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to 57% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Please read our full risk disclosure statement on AvaTrade.com website. And so today we'll be discussing trading basics, platform essentials, account types, account metrics, hedging, educational improvements. In general, the webinars we are doing on Thursday of psychology of trading is divided by two sections. The first webinar is this webinar where we discuss the trading related things that you should be familiar with trading that will affect the actual psychology of trading, and the other webinar is more psychological things that you deal with when you are trading. Risk of losing trades or setting your trading journal. This was the previous webinar. You can also find on our YouTube channel the recording of the webinar, and also if you have obviously you're getting the webinars email, so when you apply to this webinar you will get to me, and you can also ask me questions if you want the presentation of the webinar, stuff like that. Also you can ask me. I will be happy to provide you. And I also started adding the questions that you had from the previous webinar. So today we will start with the question we got from the previous webinar before we get a little bit deeper into things. So I think this question was repeated twice, so I added it. The question was how to set up a trailing stop. So trailing stop is a feature that you can set on MetaTrader 4 and MetaTrader 5 only on the desktop version of the MetaTrader. You can set it, okay? How you do it, you need first of all to download the platform. The way you can download the platform, if you go, this is an example to the WebTrader. Obviously, you can also type on Google MetaTrader 4, MetaTrader 5, and you can download it for even Mac operation system. Now it's also operating there, and also for Windows operation system. For example, here my accounts, and there is a button where it says download MetaTrader 5 or download MetaTrader 4. Once you click to download, you will need to download the file, and then you open it Then you click File, log into trade account. You have two options here: log into trade account, or it says open account. When you click open account, you will be able to select your broker, because some of the people here, they don't have the correct MetaTrader. So you can click open a trade account, and then you'll be able to select the broker, which is AvaTrade, AvaTrade Ltd. Log into your MetaTrader account using your account number, server, and password the server. You can see it says here AvaReal 2, MT5 Real 1. So you can see the server, the account number is also here. And then you click trade. Only when you have open positions. This product is working only when you have open positions. The trailing stop positions, you can click on the right option on your position. I will show you now. And then you choose trailing stop, choose the relevant trailing stop option, or do a custom one. See the picture below. So here, if you can see this screen, this screenshot, what you need to know, the file is on the left top. You click on file, you log in, and then over here on the bottom, you click trade, and you see open positions. If you don't have open positions, the trailing stop, you cannot set it up, okay? But when you do have open positions, for example, here we have two open trades, one on gold and another one on gold. You right click on the position, then you select trailing stop, and then you select 50 points, 55 points, 60 points, or you can do a custom one, but you will not be able to set the trailing stop too close to the original pricing points, okay? So this is something to take into consideration, and that's it. I basically just answered one of the questions from the previous webinars. If you have questions, you can send them here on the question box, and I'll be happy to answer the questions that you are having. Either I will answer it while the webinar is going, or either I will be answering the questions on the next webinar if I need to set a certain screenshot or something like that. Okay, so basically here, this is we clicked on you see here your account number. Trade is the option where you can see the trading platform. So this is the main screen where you can see this screen if you are logged into the WebTrader. For some of you who are not able to see the screen, you can also send it on the question box, just so I know. If any one of you cannot see the screen, when you go to the website at avatrade.com, are you able to see that screen? This is the screen of the WebTrader. Okay, and the difference, some people are asking what is the difference between the web and the MetaTrader. The main difference is that the WebTrader have some tools that are not available on the MetaTrader. Also, the MetaTrader have some tools that are not available on the web. So what is the difference between them is that, let's say a lot of clients that are more beginners, they really like this WebTrader because it have added features like a stop loss calculator, take profit calculator. So it will calculate for you what is the potential loss or potential profit that you can have when the market reaches a certain value. Also, it can calculate for you the required margin to place an order. Also, AVAProtect is a feature that is available on the WebTrader and not available on other platforms. So many features are available here and not available on the MetaTrader. If you ask me, you can set both. You can have MetaTrader and you can also have the AvaTrade app, and you can also use the WebTrader. Just make sure that you are able to access this screen. If you are not, you can send an email to the webinar and ask. I'll be happy to assist you, or ask the customer service to assist you to log into the WebTrader. Now let's go through the web. So this is the WebTrader. You click here, you see my account, payment, tools, my account, personal details, an account. You can review your accounts. When you click add an account, you can set up another real account, another demo. What is the difference between having, let's say, one real account or having a few real accounts? I can tell you that most of the clients, the majority of the clients, they like to have different accounts from different reasons. One client, for example, like to have different accounts for, let's say, different instrument. One account for indices, one account for currencies, one account for commodities, or one client like to have an account to do a certain strategy. And let's say you are losing some money and then you want to have a fresh start. I have clients that have big losses on one account and then they open a new account and manage to recover all the losses that they made on the other account. So one account can be used for a fresh start. So you can have a few accounts, it's not a problem. Also, you can select the relevant currency that you wish to have. This is also a common question that I'm getting. Clients are asking me what currency is the best, what currency should I choose, and it depends on you, okay? So some of the clients like to use the same currency that they have in their bank. So when you make a deposit, it will be the same currency as the regular currency you are using. So if you have a bank in euro and you transfer money in euro, so obviously you won't have any conversion. If you have a bank in dollar and your AvaTrade account is in dollar, similar, you will not have the conversion because it's the same one. The other one is, when you are trading, there is a currency base of the instrument that you are trading, which is also something that you should take into account. For example, if we look at gold, you can also answer in the question box if you know what is the currency that gold is trading with. So gold is traded with, if anyone knows, you can just write the answer in the question box. What is the currency of gold? So you see the currency of gold is US dollar, okay? And what is the meaning of this, okay? It means that if you have a euro account or a pound account or a ZAR account, it will do a conversion from USD to the relevant account that you have, okay? So what is happening basically is that you will always have a constant conversion between the dollar and the base currency of the account. This is why some traders, when they trade on gold, they like to have a dollar account, and then they know there is no conversion happening, and they don't need to be worried about the conversion between ZAR and dollar, or the conversion between euro dollar, pound dollar, any currency you have there, okay? So this is something also to take into account, the base currency of the instrument you are trading with. So for the deposits and conversion, it's easy to have the same currency, but always you can set up a dollar account and just make a deposit from dollar to dollar. Okay, so this is just some added value I'm adding for you because it's a question that is being repeated a lot. A lot of people, they don't really know the answer, so I hope it's useful. Also here on the instrument details, you can see some data it's telling you trading hours, the trading hours when the instrument is open. Here you see the base spreads, the leverage. The leverage, this is also a question that is being asked a lot. The leverage depends on the jurisdiction where you register from. So if you register in a non-EU country, normally the leverage will be applied is up to 1 to 400, depends on the instrument. But it depends on the country. Some countries we have a leverage applied similar to EU. Like depends on the country. Australia, Canada, we have clients from many different countries. Now we can go back here. So this is a subject we went through a lot. The balance, free margin, equity, balance, free margin, equity. I will ask a question to see if any of you are familiar with that concept, which is very important. Okay, let's say I have a position on gold. Okay, we're going to make an example right now. Okay, I open a position 1 lot on gold. Now I can see when I click positions, I see my open positions. Now we have balance, free margin, used margin, profit, and equity. So first of all, what will be my free margin when I close this order? If you can tell me in the question box. This is very important, and it is also very relevant for the psychology of trading, so you know how to better plan the psychology. So when I close this trade, what will be my free margin? Can you answer on the question box? I will tell you what is the calculation for this. Okay, so the free margin that was used to place the order will be back in the account, okay, in the free margin when you close the order. So we have a use margin of 2,368 plus the free margin. This will be your new free margin in general. Okay, now specifically we also have profits on this order, so it will also be added to the free margin. So if I close this position, what will be my free margin? If I close this order, it will be 242, the profit, plus the relevant amount, which is 10,000. So I will have around 10,200, depends on the profit, okay? Now, what is my balance? The balance is something that many people are getting confused because the balance represents your closed positions. So if I close my position in a profit, what will happen to my balance? My balance will go. But if I close my position in a loss, my balance will be lower. And I can tell you, many traders are getting confused between the balance and the equity, okay? Because the equity is very important to understand, represent your real account value. So if I close all of my positions, I will be left with the equity, okay? So let's close this position. The balance will be updated to 10,200 and whatever, okay? And now you see the balance is $10,271, okay? The free margin is equivalent because when you don't have any open position, so the balance will be equal to the free margin and will be equal to the equity. But let's open the position again. Now we can open with something else. Let's say if you have a preference, you can write also in the question box what do you want me to open for the sake of the example? So I'm going to use full exposure now. Full exposure means I'm going to use all of the margin I have in the account. For the sake of the example, you see 1.26. I'm using $10,214 to place an order of 1.26 on Bitcoin. I'm just opening the order because I want to show you what is happening when I open the trade. Okay. So now what? We have the equity drop to 9.6 thousand. Okay. It means I'm losing money on this trade. I'm losing 500 and something. I'm losing money on this position, even more than that. Okay, because before I had 10.2 thousand, and now I have an equity of 9.8. Okay, the balance. What do you think will happen when I close this order? What do you think will be my balance? That's the question. You can also write it down in the question box. What is my balance if I close the order? The balance will be updated. Depends on the profit and loss. Okay? So the profit and loss when I close the order minus the balance or plus the balance will be my new balance. But if I'm closing this order in a profit, does it mean that my account is in a profit? No. Why? Because it depends on the other open positions that I have on my account. So this is a very important concept for each one of you to understand, and I hope that you can understand from my explanation the difference between the balance and the equity. So the equity is my real account value. Now, look, the equity is bigger than the balance. Why? Because my position is now in a profit. Let's look how much profit I'm making on my position. I'm making $500 profit on the position, you see? And it means that if I close the position, what do you think will be my balance? You see my balance went up from 10.2 thousand to 10.6 thousand, okay? You see the market was moving very quickly and it dropped a few hundreds, but still I made another profit on this position, another around $400. And again, the balance is free margin, is equity because I don't have any open position. So this is an example for you to understand that the balance is very, very different than the equity. And I'm getting this a lot that people are asking me these questions. So I just wanted to give you a demonstration. If you still can't understand, let me know. I'll be happy to explain it again. So the balance represent only the closed positions, okay? It does not include any profit or loss from open trades. Every time you close a trade, the balance adjusts accordingly. If you close all open positions, your balance will be equal to your free margin, will be equal to your equity. The free margin is the amount of money available for opening new positions. When you close positions that are not hedged, the free margin increases according to the amount of used margin that gets released back into your account. So what does this mean? Now let's try to choose something else, okay? Let's try the French index, for example. Okay. Now, let's say we open one lot sell on the French index. The margin required for this order is 9.7 thousand. What is the calculation that we need to know? The free margin is 10.6 thousand. 10.6 thousand minus 9.7 thousand. I will be left with around $900 in free margin. Okay. If I will be left with $900 in free margin, it means that my margin level will be how much? It will be above 100% or below 100%? What do you think? You can send the answer on the question box. So the answer is the margin level will be above 100%, okay? Because my free margin is positive. As long as my free margin is positive, my margin level will be above 100%, okay? Specifically here, because is an order that I'm using the majority of my money, I will not have a lot of margin level, but I will still be above 100%. So when we open it, you see I'm above 100%, I'm at 107%, okay? 108, it's moving, okay? Now you see the free margin is 700, 600 left. It means that I use the majority of my margin, okay? My used margin is 9.7 thousand. This represents the amount of money that will be added to my free margin when I close the position, okay? What I can also do here, which is also very related with psychology, because you understand how trading works, you understand the psychology of trading. I have a sell position. So if I'm going to close a sell position, it's going to add, I'm going to get some margin back. So if I'm going to close 0.2 out of the total position I have open, what will be the free margin added to my account? Any of you want to answer this question? If I close 0.2 lot on CAC, on the France 40, how much will be added to my free margin? Around 2,000 is the answer, okay? Let's see. 0.2 lot. If I close it, you see how much I will lose on this if I close it? I lose a portion, 0.2. This is the amount of money will be added to my free margin, around 2,000. Close it. So my equity is 10.3 thousand. I'm still in a profit of 358. We started with 10K. My used margin got lowered. My free margin got higher by 2,000. And let's say I close another 0.2. How much will my free margin will increase? It will increase with another 2,000 approximately. You see another 2,000 was added, okay? And now you learn, this is a very important lesson to learn how to navigate through your free margin. So how to increase it, okay? Why do we need to learn how to increase our free margin, okay? Because of this, you see the margin level. When the margin level reaches below 50%, what happens? The position will be closed automatically due to a stop out, okay? This is why it's very important for us to have a relevant amount of margin level if we do not want the position to be closed on a stop out. So this depends on you. If you are more conservative with your approach, or if you like a bigger level of risk, because if you like a bigger level of risk, you will more likely want to use more margin, and then you can get wiped out quickly, and then you can make more profit per each point the market moves. So this is entirely up to you. But when the margin level reach below 50%, position will be closed. So if you want to hold the position, you need to have above a certain amount that you choose, okay? Above 50%, above 60%, above 100%, above 150%, above 200%, or 300% is really up to you. You choose what is the margin level you want. Okay. Now let's say I close another 0.2, so my free margin should increase with another 2,000. Okay, you see my free margin increased to 6.6 thousand, and my margin level increased to 269% now. Okay, so the margin level is increasing and increasing and increasing. When I close a position, my margin level also increases. It means that I'm less likely to get into a stop out. Okay, as if my margin level is higher, I'm less likely to get a stop out. Let's say I close another 0.2%. Again, this free margin should increase again with 2,000. Now it is 8.5 thousand. Do you want to guess what is my margin level now? How much it's going to be? Before it was 200 and something percent. So now you think the free margin, the margin level is above? Yes, you see I clicked on it, so it's above 500% now. Okay, why? Because now I'm using less money from my old account. I'm using a smaller portion. Okay, now if I close another 0.2, it means I'm going to close all of my positions. Then we are back to square one, where my balance is my free margin, is my equity. You understand why the use margin is 0? Because we don't have any open positions. Okay? How does it work? It works is that the leverage will determine how much margin is required to open a trade. If the leverage is higher, it means you need less money to open the position. If the leverage is lower, it means you need to have more money to open a position. Okay? Now, the interesting question is going to be, if the account leverage is higher, will the risk be higher? Okay, this is a misconception. Many clients think that if the leverage on the account is higher, the risk is higher, which is not correct. The risk is entirely up to you. You choose what is the relevant amount of lot size you wish to have for the position. Okay, so here you can see 0.01 lot, okay, which is the smallest position size, or 0.1 lot, or 1 lot. You choose the risk, okay? Maybe if you have a smaller leverage, you could not even open 1 lot, okay? But it doesn't really mean that it's more risky or it's less risky. It only means that that you can either open more positions or either you cannot. Okay. And if my leverage here would be 1 to let's say 1 to 20, like our EU customers, it means that I would need around 23,000 to open this position, 1 lot on gold. Okay. So this is regarding the leverage and how it works. So the balance, the free margin, the equity represent the real value of the account, including my open positions. Use margin represent the margin that was used to place the order. The margin level, it represent when you're going to get stopped out. There is a formula here. How to increase my margin? You need to close a position that is not hedged. Let's talk about hedging here. What is hedging? Hedging is when you open 2 positions, one in let's say a buy position and one sell position, the same lot size, just different directions. Okay, let's give you an example how to hedge a position. And if you want to choose what instrument are we going to hedge on, let's hedge on Cooper. Okay, so let's say I want to open a trade with 5 lots or 9 lots, 8 lots, say 8.5 lots, 8.4, 8.3. You see what I'm doing? 8.3 I can open, 8.4 I cannot open because I don't have enough money to open this position. So 8.3 is full exposure. Because we want to hedge, I need to choose something smaller. Okay, why? Because the only rule of hedging is that I need to have above 100% margin level. Okay? If I open with 8.3, probably I will not be able to hedge the position because I will not have enough margin level. Okay? So in order to have a positive margin level above 100%, I need to leave some free margin. Okay? So the calculation is 10.4 thousand minus 10,000, let's say, will leave me with $400. Okay? And if I have free margin of $400, my margin level will be positive above 100%. So let's say I open this order. Now I have one position open on copper with position size of, you see it's 80,000. We go to copper. And let's say we want 80,000. 80,000 is equivalent to 8 lots. 80,000 here. Doesn't let me. Just look again. I bought, you see, I bought 80,000. But my margin level is 98%. This is why it didn't allow me to hedge the position. Okay? So what I need to do, I could just wait for the margin level to be above 100%. You see here is 100%. Let's hope it's not gonna decrease. You see decreasing, increasing. Let's just wait a sec to see if it may allow me. You see still no, because I'm at 100%. Yep, I managed to hedge my position because what happened, the margin level hit 101% and the system allowed me to hedge. So what is happening now? I have 80,000 contracts on copper bought. I have 80,000 contracts on copper sold. I'm fully hedged on copper, okay? Which means, okay, if the price of copper goes up, okay, am I losing money or am I making money? If you want, you can comment on the question box. Because I have two positions, one is going to lose money, one is going to make money, okay? This is the concept of hedging. Some clients really like this concept because you are hedged, okay? What does it mean that you are hedged? It means that you can limit the amount of losses you are having due to the fact that one is buy, one is sell, one is losing, one is making money, okay? Now I want to keep this position just for some time to show you what is the outcome of the hedge, okay? I want one to be in profit and one in a loss, okay? And then I decide what to do next. Either I close the position that is in profit and I hedge it again, okay? Or either I keep it, okay? But if I keep it, I don't know what will happen. If I keep it, I'm going to pay swaps. which is overnight fee, okay? Depends on what position size, but I'm going to pay swaps, and also I'm paying spreads to place the order, okay? So what I want to do, I want to wait to see if one position is profitable, then I can close it in a profit, and I can set up another hedge, okay, if I want. So this is hedging. This is strategy many people like to use. If you have a question about hedging, you can ask it here. After that we finish everything else, I will go back to hedging and explain, elaborate a little bit more. What else we have here? Hedging. Then we have the new order screen. Buy and sell price, the difference is the spreads. The lot size decides the profit and loss per each point. The market is moving. The margin impact is the required margin to place the order. What else we have? The AVAProtect is a feature that you pay a certain amount of money to get the protection on your position. I elaborated in our previous webinar what is a AVAProtect and how it works. I will quickly recap, but also you can watch previous webinars. We only have the AvaProtect product on gold, silver, and currencies, okay? So if we select a volatile currency, for example, USD ZAR, okay? 1 day, 2 days protection on AvaProtect with 0.01, it will cost you $5.02, okay? This price may change depending on market volatility. When the market is more volatile, probably this price will be higher, okay? When you increase the lot, this price will be more expensive to get the protection. 0.02, you need to pay $10. 0.05, you need to pay $25. 0.1, $50, one lot, $500, 10 lot, $5,000. Why are you paying this? You're paying because you don't want to lose more than the protection cost, okay? I have seen clients who use it and were supposed to lose a very big amount of money, but because they used AvaProtect, they only lost the protection cost, okay? So this is why this product is very useful. You can trade on the smallest position size or a bigger position size, up to you. Now, how does it work? Okay, when you place the order, the amount you see here, the price, is going to be deducted from your money, from your free margin, okay? And additionally to that, you need to have enough margin to place the AvaProtect order, okay? So if I want to open 10 lots on USD ZAR, how much money do I need to have? Minimum of, you think 7,000 is enough? If I want to place the order, if I have 7,000, my margin level will be 100%, so yes, it's enough. 7,000 plus, okay? Now, if I want to, let's say, trade on 0.01 lot, I need $5 for the protection cost that will be deducted immediately from the account, and I need another $2.5 for the margin requirement. I would need around $7-8 to place this order with the protection cost. Now, why are you paying the protection? So for the duration that you choose, okay, any negative floating will be reimbursed automatically to the account. Okay, so if you have negative floating of $10, $5, by the end of the protection, it is reimbursed automatically. Also, if you close the position while the position is ongoing with the duration of the protection, okay? You see here there is a duration. So when you open the position, it will tell you when it's going to expire, okay? And if you close it in a loss while the duration is open, it will be reimbursed automatically as well. This is why this product obviously costs money. Some people can ask, why not use a stop loss? Why wouldn't I just use a stop loss? Because the stop loss is not guaranteed, okay? When you set a stop loss, it is depending on the relevant price of the market. So it happens many times, the market jumps and there is a market gap from this price to this price, and therefore the stop loss will not be able to be triggered exactly at the pricing point you set. So what is required to place an order with AVAProtect? You need a free margin and you need to have the price of the protection, both of them. When will the charges appear on my account? Immediately when you open the position with AVAProtect. How will my losses will be reimbursed? Losses are reimbursed under two conditions. If you close the position during the protection period, or if the protection period expires with a negative floating, the loss is reimbursed automatically, but only on the position you have protected, of course. So if you have a few positions and some are not protected, so on the ones that are not protected, you will not get reimbursed. Only losses that occur inside the protection time are covered, plus the ones that are protected, of course. How do I make profit without protect? You must earn more profit than the cost of the protection. What happens if my position continues after the protection expires? Any losses after the protection expire are not reimbursed. That's why you have the duration, and you can close and open a new one. Only the negative floating inside the protection duration is covered. If there is no negative floating, you won't get reimbursed. Here I have a few examples. I shared it in the previous webinar as well. This is pending orders also. Previous webinars I shared what is a pending order. I'll give you an example. Execute when price hits. This is how it's called on the web. You set a price. Okay, let's say USD ZAR. If I think the price is gonna reach 16.2, then I want you to buy or sell the position. When I set the pending order, I'll be able to trigger it. Now it doesn't let me open. Why? Anyone knows why I can't open the trade? Because my use margin is maxed and my free margin is negative. So I can't open the position, okay? I don't have money to open the trade. I have two open trades here that I showed you, okay? And you can see one is profitable, okay? And the other one is now losing 1.2 thousand. There are two hedge positions that I wanted to show you earlier. So I went through the pending order, execute when price hits. Let's go through the take profit and stop loss. Now we can use, you see here you can edit. Take profit and stop loss. You can set the possible profit. You can limit it to a certain pricing point. It will tell you at what value of copper will you lose how much money. Okay, so if I want to know when I'm going to reach $5,000 profit, So when the price of copper reach 6.2820, I'm going to make 5,000 profit on this order, and with a loss, let's say 5,000, the price is 6.1590 will be 5,000 profit. Okay, if I click update, when the price reaches 6.235 or 6.2830, what will happen? The system will try to execute closure when it reaches this price. Okay, so you can use the stop loss and take profit calculator to get a better understanding at what values you can potentially lose money or make money, and better plan your situation in the account. This is a few examples of different stop loss. Trailing stop we managed to cover. And basically today we discussed a lot about different things that we didn't discuss in our previous webinar. I tried today to explain you more of the things that are important for the understanding that you need to basically control your account. You need to know how things are working to better manage the account. I put high importance of setting yourself up with a trading journal and basically having a certain setup before you open a trade. So you can also have a setup written so you know when you're going to open the positions, and then you can analyze your setup on the journal so you know whether you followed your plan or you didn't. So if I set a plan every time when the price of copper reduces by 1%, 2%, 5%, I want you to buy, for example. Okay? So this is an example for a setup. And what does it mean? The price of copper right now is 6.2. 10% drop is equivalent to this amount, and then it means that you set a pending order. We don't have margin to do that, but you set a pending order to execute a position on copper with a new price that you want. Or this is a setup that is relevant for psychology of trading, because in that way you cannot really act emotionally because you have a plan and you just follow a certain plan that you set. This is just one example, 10%. You can also work with an indicator, okay? Whenever Bollinger Bands reach a certain point, you buy or sell, okay? Whenever that you receive free supports or free resistance, you buy or sell. And then you can actually track your strategy and see if it's working for you or if it's not working for you, okay? And I see our webinar is going to be over soon, and I will just share a little chart, for example, of copper. You can also make the chart a little bit bigger, and over here you can use the cursor, okay, just so you know the relevant pricing points. So over here you see that on the 7th today, few hours ago, the price reached the highest and the lowest, and you can see here on the charts when was the last time it reached this price. When did the price of copper hit 6.235? 6.2365. You see, so it's never reached this price before, okay? In the past, okay? Because the price was lower. So you set your strategy and then you execute. I hope that everyone enjoyed the webinar today. I'll be having another webinar next week. If you have points or if you have questions, you can reply to the email of the webinar. I'll be happy to answer them. And I hope everyone enjoyed the webinar. I hope next webinar you come with some question and you will be able to participate more, like when you ask questions and I also reply to them. Take care, everyone, and I hope you have a profitable and fruitful and a very enjoyable trading journey. And I hope that we will meet again in our next webinar. Bye, everyone.